All right. Yeah, so my partner Carl, who's also somewhere on the line here, and I have been in technology investing for some 20 years. As you noticed, my accent is originally from Germany. I moved here after we sold our ISP in 2000, and we set up our first fund 20 years ago, which was originally focused on multi-massive online player games and voice over IP solutions. So those topics share a lot with the blockchain space of MMORPGs already having in-game currencies with US dollar exchange rates in the 90s, and then voice over IP being the most used peer-to-peer solutions. So that's kind of our background. Our focus is very much on value transfer systems within the space of blockchain. And actually, I'm kind of moving a little bit away from the term blockchain itself, because it's really about decentralized software solutions, which would then also include graphs specifically. But first, kind of a refresher, because that's always or very often not really well understood. So I hope everybody at some point in time read this particular white paper, the Bitcoin white paper. What's important about this to realize is we still don't have this, as in the original battle cry, we still don't have peer-to-peer cash, as in with all the facilities of me handing over a bill that doesn't incur fees, that doesn't require me to wait and so forth. We still don't have this today. But more importantly, what we see a lot of projects in the space is not understanding is the difference between what's an invention and what's innovation. So the particular invention of the Bitcoin white paper specifically was not blockchain technology, right? Blockchain technology has been around for since 1999, I believe. It was referenced in the second footnote in the Bitcoin white paper itself. It's kind of a time-stamping hashing mechanism. What the pseudonymous author did is he combined it with a particular consensus mechanism, in this case proof of work, which then created as a result from a technology perspective this thing that's called Byzantine fault tolerance. In practical terms, it's the mechanism of creating basically a digital bearer instrument, something that I can hand over, that I can take back. And so that's very important to understand once you start actually innovating on that concept. So that was the invention. So now how do you innovate? So the innovations on top of blockchains are self-executing code, what often is referred to as smart contracts, or by it, they are not smart at all. They're mostly if-then statements, or I call those things digital vending machines. That's, in my mind, the most useful metaphor. I'll go into that a little bit more. Then the aforementioned digital bearer instrument, as in blockchain native ones called coins like Bitcoin, and then protocol-based or API-based ones are called tokens. Everybody probably knows ERC20 on Ethereum. But then last, and probably long-term most important, is the concept of decentralized capital formation, and here specifically decentralized autonomous organizations. So with that out of the way, so what are digital vending machines? Everybody on the call here has probably heard of cryptocurrencies, and I've been saying for a number of years now, the number of cryptocurrencies we need is somewhere between 0 and 1. It's a lot of people simply not understanding the current systems that are value transfer, including money itself. So what we need is digital vending machines specifically to address all these different market spaces. So remittance, lending, payments, from a VC's perspective, it's all the money in the world is a good starting point, right, that we're addressing. So what do I mean by that? So smart contracts lend themselves to create, as I mentioned, unstoppable code, as in you can deposit an asset or a right at this digital vending machine by authenticating yourself against a digital vending machine, and someone else can pick it up using a similar mechanism to do so. So right now, we are mostly limited to digital and native instruments, and that's the next evolution where we transcend to the quote-unquote real world if and when we solve identity specifically, which is the main topic to be solved, in which case, obviously, we then also can address all the government functions and anything else in accounting, auditing, and so forth, which decentralized software solutions are ideally suited to provide. Lastly, and those are the other adjacent industry, in short, blockchain-based solution, decentralized solution address a lot of different topics, right? Just like the internet, in my mind, it actually creates the internet for the first time. What I mean by that, a lot of people refer to things like Web 2.0, Web 3.0. In my mind, we actually never created Web 1.0. What you guys are looking at is not the World Wide Web, it's the commercial web, right? It's controlled by very few people for access, controlled by very few people for the distribution of eyeballs. And this is a graphic that you probably might have seen if you looked at the space from an investor's perspective as far as how value is being transferred on a blockchain. And there was this initial idea that there would be a lot of value being attributed to the protocol layer itself. That's probably wrong. That's probably the exception. That's true for things like Bitcoin and so forth. But for the most part, the value is really to be had on the application layers, or more importantly, on the on-ramp and off-ramps to the new protocol. So what do I mean by that, and what does it mean in practical terms, right? To make a very simple example, there's this constant battle cry within that space that says blockchain adoption or cryptocurrency adoption. That's a little bit nonsensical, right? That's a little bit like saying people adopted the voice over IP protocol. People did not. People adopted Skype. They adopted WhatsApp and so forth. And that's the chasm that we still have to bridge in this particular space, which right now is dominated by technologists. And I love technologists, but we also need to be building solutions that are actually being adopted by users at large. So how did this evolve, right? So I'm going backwards and not forward. So what I wanted to show real quick before I went backwards was this little thing that I built, which is, we started out with an internet protocol somewhere in the 80s, I think, maybe 90s, then added FTP protocols and transmission control protocols, SMTP. So if we didn't have SMTP, you still would put stamps on letters, right? So right now, if in the United States, we would have to put a stamp on every email, it would exceed the GDP of the entire United States within a week based on the number of emails that are being sent. Similar things hold true for something like HTTP for sending value, or voice over IP, which we're using right now. If you had to pay for every minute that we're using right now, everybody would be out of money by now and hanging up, right? But now the missing protocols that we didn't have, and I'm actually gonna move away from this particular metaphor as money, right? Money still is sitting most of the time in databases. We need to liberate from databases because these databases are controlled mostly by rent-seeking entities, and mostly we call them banks or otherwise financial institutions. But then secondly, more complex protocol implementation that address assets. Think about your house, your car and so forth. How do you transfer that? And people are working on this right now. Lastly, most importantly, the topic of identity, which is key to all of these. So all these ideas that we have, all these companies on the application layer that extracting value is tendentially right. The value is not going to move to the protocol layer, though the value will still be on the application layer. So I'm going to skip through this slide. This is just referring back to how we made allocations in the past with Protocol Fund 1, where we had been focusing mostly on seed. Moving forward, we're going to move to the later stages. Since this was all very fast, we typically publish something on Forbes every couple of weeks. So there's a few articles. I think I'm out of time. And so you can learn about some more of the concepts that I touched on. And here's my contact slide, and I almost made it.